Hey everyone, welcome back to the Delphi podcast. I'm your host, Tom Shaughnessy, the Chain Reaction segment. Today I have on Colin and ZX of Filecoin. Both are community members. Colin is an ecosystem lead. ZX leads a lot of the crypto economics there. We recently had Colin on for a great overview and dive into Filecoin. Today we're going to focus specifically on the token econ. I find it fascinating and really interesting. Colin and ZX, how's it going?
Great.
Excellent.
Yeah.
Guys,
Thanks
it's
for
great
having us back on, Tom.
Yeah, it's great to have you guys. So I guess Colin, kind of a lob for you because we kind of all did this, but what's the quick elevator pitch on Filecoin for those that missed our last pod?
Sure. So Filecoin is a network for decentralized storage. You can think of Filecoin as a completely global open market where anyone in the world, from an individual like myself in my apartment to a really large data center, can become a data storage provider and compete with the large cloud storage companies. So that's kind of a completely global network. And as a whole, Filecoin has the reliability, the geographic distribution, the scale, the diversity of storage solutions to compete in the growing cloud storage and CDN markets. And so similar to Airbnb, where it was previously impossible for an individual homeowner to compete with a large chain like Marriott, the platform allows small businesses, data centers to plug in and compete as a global network, and really change the paradigm of what it takes to be a cloud storage provider in today's world.
It's awesome. Yeah, it's a lot to bite off, but it could be super interesting. I'll point people in the show notes to our last pod if people need to catch up. But let's dive right in, guys. At a high level, really basic, what is the FIL or the Filecoin token used for right now within the network?
Yeah.
Yeah. So any interaction, so Filecoin is a utility token for the network. So any interaction with the network requires usage of the Filecoin. So like every transaction will burn a small amount of Filecoin, and for providing storage supply to the network, you need some token for pledging. And then when you consume storage from the network, you pay for the storage in Filecoin. There's also other things that you can use Filecoin for within the protocol.
It's awesome. Yeah, so it's a utility token there. And I guess the minting model is pretty interesting with Filecoin, right? Like you have a unique kind of minting model where you reward storage providers, and you have two ways of doing that. You have simple minting, and then you have baseline minting. Can you kind of walk us through what each of those are and how you reward actual storage providers on the network?
Yeah, so I'll introduce the concept and ZX can go into detail. So we really wanted to bake in some fundamental incentives into the protocol to reward the right behaviors. Like Filecoin's off to a great start, right? We launched about a month ago. Since then, we crossed the 1 exabyte hurdle of total storage on the network. That's grown 60% in the first month, but we're very much in the first out of the first inning. And where we think Filecoin will evolve to is to be completely transformative for the cloud storage industry and for the decentralized internet, right? But in order to do that, we need to construct a whole bunch of incentives into the protocol and into the code itself to incent the right behaviors. Now, when it comes to minting, what the community has done is implement a system where only if the Filecoin network as a whole reaches certain targets that can be competitive with the large cloud storage providers, only then will more tokens be minted and be accepted into as incentives for miners in the network. And if the network remains more modest and smaller, then the circulating supply and the minting schedule would be a lot smaller, right? So that's kind of the principle of it all, and ZX can dive into some of the details.
Yeah, definitely. So like for the simple minting, so most like traditional blockchain projects follow a similar Bitcoin family style exponential decay. That's why we refer to like that whole arm, we call that simple minting. It's simply just based on time elapsed in the network, and then we just mint accordingly. There are a few problems with that. Like most notably is when the network is the least mature at its very beginning, the minting tends to be the fastest, and that's where the participation is the lowest, and the utility of the network is also the lowest as well in its network trajectory. And also that creates some very short-term incentive for people to like over-invest in hardware instead of investing in what is really useful to the network and to the mission of the network. And that's why we see some of this very high ceiling throughput. That's some of the short-term incentive that the simple minting itself will create. And there's this other principle where we want to match, as Colin mentioned just now, we want to sort of associate minting with the utility of the network. And this is where baseline comes into the picture, where the community defines sort of a baseline or a goal that the network tries to collectively achieve. And then we work together towards that goal, and that will give us another notion of how much the network has progressed in achieving its KPI. And through that, we define a notion of like a baseline, a notion called a network time, and then we use that notion to mint accordingly. And in the end, we throw in a combination of both of these, because simple minting provides the benefit of like counter pressure to shocks. And like if, let's say, not as many miners show up, the remaining miner will still be earn a greater profit, and so on and so forth. That creates some kind of anti-fragility to the network. At the same time, the majority of the reward is in baseline, where the community as a whole works collectively to achieve a common goal.
Got it. So like at a very basic level, the one segment you have for minting has 30% of the rewards, and that's simple minting. And then the rest, the 70% is in baseline, right? So the 30% for simple minting, just think simple 30% here, that is the same no matter how many storage providers are on the network?
Correct.
Gotcha. Okay.
Yeah.
And then the 70%, the baseline minting, what you're saying is those rewards vary depending on how much storage is on the network. What is the baseline though? Is the baseline like an amount of storage, and how does that grow? Because I guess the key here is that you're using that 70% baseline minting to incentivize growth in network, because people aren't getting those rewards unless your baseline storage amount is reached. What is that baseline, and what does that grow at?
Yeah, so we start from like 2.5 exabyte, and then we're growing 100% annually every year. And so the idea there is like we start from a relatively small percentage of today's world's total data, and then we grow at a faster rate than how fast data is growing in the world today. And then in the future, community can come together and say, oh, that growth rate may be too fast, and we can slow it down as Filecoin stores a greater percentage of the world's data.
Yeah, so basically at the end of year one, the baseline to get the full 70% is 5 exabytes. After that, in year two, it'll be 10. After that, in year three, it'll be 20. So you can see if you unlock the full amount, this becomes an absolute rocket ship and very competitive capacity-wise with some of the large cloud storage providers. Now, today, we're below that threshold, right? So we're not at 2.5 or 5 exabytes just yet, which means that all of those 70% tokens, a fractional amount of those are withheld by the network. And so, when the network catches up to those things, then it releases it. And so it also buys the network quite a bit of time, I think, to be able to have a whole bunch of other things catch up by kind of withholding those tokens until we see, the scale and usability that we require.
Yeah, it's pretty cool that you guys have the dual structure here, because the 30% of rewards kind of ensures that storage providers actually can earn something, but the 70% dynamic amount kind of ensures that you're not over rewarding if there's not enough storage on the network. Colin, to your point there, let's say you're not at that network level where, let's say you're not at that baseline for any given year, and you guys are holding back some of the rewards. Are those rewards paid later? Are they put into some kind of pool? What happens there?
Yes.
Yeah. So first of all, it's not us holding anything. So like it's the protocol having it inside its balance.
Of course.
And it's not the action of like anyone. In some ways, it's the collective action of the community, and that is the beauty of it, right? The community decides how fast, how slow the minting will become. When let's say some parts of so the question was, so what happened to the early reward that was not paid? What do we do with that, right? The algorithm is basically we smooth out and spread these rewards towards the future. And then as the network ramps up in its capacity, and more of that reward will be minted in the future.
Got it. That's pretty cool. And how does this work on the flip side here? Let's say you guys attract way too much storage, way over that baseline. People are clearly getting the full 70% rewards for the baseline. They're obviously getting 30% for the simple minting. are these, is it just, will people turn off their storage because you're beyond kind of the baseline, or how does that work?
Not necessarily, like just like in the case of Bitcoin, right? Like in some ways, only simple, you're always above the baseline. The baseline is zero. People are not going to stop because the baseline is zero. People will still, because for an individual storage operator, you're thinking about what is your share of the block reward. Sure, the pie is growing, but I also want to get a bigger share of the pie. So like the goal of the incentive is to how do we create forces such that everybody has the incentive to work together to make the network more successful.
Yeah, so it has
really
this
cool.
dual incentive where miners have to both collaborate and compete. They have to collaborate in order to get as close to the baseline as possible, but they have to compete in order to get their fractional share of the pie and maximize their own returns. So it's got that dual structure.
That's awesome. And how fast do these, the 70% bucket, how fast do those rewards tick up or down? Like, let's say we're like, 10% from the baseline storage capacity that the network's supposed to have in any given year. And let's say, somebody new comes online and they fill that storage and now you're at your baseline. How fast do the network rewards tick up? Is this in real time?
Got it. So this happens in real time. And so now we have to go into the detail of how some of these things works. So power gets added to the network every day, and some power might get dropped every day, but they will incur a penalty because that's what the network doesn't want to incentivize. So that happens all the time and every day. And also, it's not that you can just add power magically all of a sudden, right? There's a process of adding power, and that takes time. And just like I mentioned, there's this notion of a baseline, which actually it's in the unit of space time. There's basically an integral function under the hood to actually smooth out some of these changes. But without going too deep into the details, so people will add power, and that would increase the total power on the network as an approximation of the network's utility. And there's a mapping to say, okay, so how much progress have you achieved and how much time has elapsed in the network? So that's why we call it a network time. And then from there, the network runs an operation to compute how much will be minted at a particular given moment.
That's pretty cool. Yeah, it's great that it's dynamic. And I guess just to round out this conversation, the rewards for storage providers or other nodes on the network, how are rewards given to these people, and are they locked, I guess, for the various stakeholders?
Right. Go ahead.
Yeah, so of course, a core principle in this whole design is that we only want participants that are here for the long term. With other networks, it make a lot of sense for folks to participate for 3 months and then go away. With Filecoin, that doesn't make any sense. Think of the Airbnb analogy. As an operator, you need to provide great services in order to compete in the Airbnb marketplace over a long period of time. And if your apartment gets deprecated, you're going to need to invest in improvements and great service, et cetera, right? So we want to align everyone for the long term. The reward structure for miners, they basically get 25% of their block rewards vested after they earn it on a block by block basis, but 70% of that vests over 6 months, and hence we continue to incent these miners to have like long-term behavior and invest in the network for the long term.
That's awesome. Sorry, Zach, go for it.
Yeah, and you mentioned stakeholders. I also want to highlight, right? Like sometimes we talk a lot about miner because I think for blockchain, that's the very dominant group. But like Filecoin is a marketplace. It's a platform economy enabled by blockchain technology. So there are other stakeholder groups on the network. And the incentive design is to basically take everyone's interests, both short-term, medium-term, and long-term into account. And how do you align that with the goal of the network? And I just want to highlight there, I think we forgot to mention just now, like what are the stakeholder groups? So we have the number one stakeholder group is actually storage clients, right? Because that's what the network is trying to serve. We're trying to create useful storage related goods and services such that people can use it. So storage client is our number one. And then we have miners. And then we have like developers who are building building experiences on the network to make the network more attractive for storage clients. And they're working with miners pretty closely. And then we have token holders who are facilitating transactions and liquidity to put capital into production and put it to work. And then we also have ecosystem partners that would foster the growth of the ecosystem. And like lots of this design, it's actually having all these parties in mind. How can we make everybody work together to achieve a common goal? And everybody will benefit from doing that. Yeah.
And so that long-term orientation applies to many of those stakeholders. You know, the foundation, their tokens vest over 6 years linearly. Protocol Labs, same thing. For investors, they have various vesting schedules from 6 months to 3 years, although the majority of investor tokens are in the 3-year buckets. They take a very long-term view. Ecosystem partners, if they get a grant or something like that, those vest over 6 years. And so all of these mechanisms don't just apply to miners to orient them for the long term, it's all those different stakeholders.
That's awesome, guys. So just to round out, I want to go on to the amount that you have to pledge to be a miner, but just to round out this discussion on rewards for the listeners and myself, you guys have, just round out, you guys have 2 reward methods. One is the simple minting, so 30% goes to the network to support it. The 70% is dynamic, and it's based on basically a storage capacity, and that aligns, you know, obviously the storage growth network long term, so you're not over rewarding kind of now. And then the other thing is that those rewards are locked for several months to kind of incentivize good behavior. Is that a good summation?
Yes. I want to add one more thing. So it's not just the capacity. It's so we have 2 notions of like power, and like maybe I heard of a Filecoin Plus program where we actually put power into hands of storage clients and motivate the community to do business development to bring demand onto the network. And some part of that is being subsidized by the block reward as well.
That's awesome.
So we can talk about that in detail for sure.
Yeah, for sure. And guys, let's go on to, I'm fascinated by the storage, kind of the miners and their dynamic here, right? So they have to pledge a certain amount of Filecoin's token or FIL to become a storage provider, right? This is really interesting kind of from a Tokenecon perspective, because you have the, you know, those providing capacity aligned with the network because they have to obviously stake Filecoin. It's kind of hard to figure out, I think, from the outside, like what exactly that pledge is, right? Because again, there's 2 components of this, like just like in the reward, you have the initial storage pledge and a consensus pledge. How do you think through these at a high level? Like what exactly, how much are people actually pledging? What's the total goal of how much Filecoin should be staked by providers, I guess at a high level?
Yeah, so so there are many constraints here about pledge, but the fundamental goal is for consensus security and storage safety. And how we think about how much to pledge is actually, so it might be a new concept for folks, but if you think of it as the mindset of like a host coming to Airbnb, is a decentralized Airbnb. So there we need to put down some deposit to make sure that you're aligned with the platform, and then there's something to penalize if you do something rogue. And then the next question is, how do we do this pricing? And from my point of view, like pledge itself in Filecoin is not unreasonable in the sense that so when a miner adds a sector to the network, there's a minimum duration and there's a maximum duration. So you have to add at least for 6 months. And then the initial storage pledge is basically doing a projection of, okay, how much given how fast the network is growing, which is how much your share is decreasing, and given how fast the reward is changing, increasing or decreasing, what is the projected share of reward earning in the next 20 days? And then you put that into the initial storage pledge. And there is like a fraction of supply that we need to put in for your initial consensus pledge. And then you add a sector for at least 180 days, which in theory, you will make back the initial pledge because we do the projection for 20 days, which is a much shorter period of time. And from a designer perspective, we try to make this pledge as low as possible at the same time without sacrificing security or incentive. And then the decision is then up to the miner to decide what kind of strategy profile would make sense for them. That may not be an optimal solution because it's an economy, so different people have different profiles, but there is some kind of solution that will work for miners. And then at the end of that 6 months or a year and a half, if the promise is fulfilled to the network, miners get back their initial pledge. So they're only incurring a capital cost on the initial pledge per se.
Got it. So I guess just to summarize, the miners have to put up 2 different pledges. The first one is they put up kind of an estimate of the 20 days worth of block rewards that they're going to get. And then the second pledge, they have to give kind of, I guess you guys are targeting 30% of the network stake. So they kind of give their pro rata amount Filecoin and they stake that as a portion?
Yes.
Got it. So in net, you guys are targeting 30% of the circulating supply locked up on the consensus pledge. But in reality, it'll probably be more than that as miners compete to put more on. And also once you're adding in kind of the initial storage pledge as well to that.
So there's a few like details there. So it's a pro rata by what, right? Pro rata is by the network baseline. So it's like in the event that we hit the baseline, we are targeting at 30% of the circulating supply lock in initial pledge, but that is not a hard bound. So everybody get pro rata a small fraction of that as they add storage to the network.
Got it. Okay, cool. And
yeah.
I guess one of the interesting questions here is you guys just went live, right? So circulating supply is kind of thin. There is a bunch of supply coming online over the next, couple months, years. Is there enough Filecoin circulating today for miners to pledge to reach that baseline that you guys have to ensure that they're then getting the maximum amount of rewards based on your dynamic rewards?
Yeah, so in terms of like whether there's supply available, I think yes, and supply is also increasing over time. So there is enough tokens for miners to pledge to reach the baseline over time. Like baseline is not going to reach in a day as well. Yeah.
That's cool. Yeah. Is there like, how's that dynamic playing out now? Like, is it pretty hard for storage miners to get the Filecoin they need, or are most of these providers like, are most of the storage providers actually people that, took part in Filecoin's raise and they already have Filecoin? I wasn't sure like the dynamic of, hey, I have a lot of storage capacity. How do I go actually get the Filecoin I need to make these initial pledges?
Yeah, so I think there are many ways for participants to acquire Filecoin token for pledge, and we also saw like lending market popping up, and also can acquire from different markets. But what I do, like, I don't exactly know what the exact breakdown, because it's a population, right? Like it's like any economy. But what we do observe is the chain is onboarding capacity at a very fast rate. So it's right now we see like the base fees, which is like gas prices in Filecoin is pretty high. That means that people do have access to Filecoin. They're adding 16 petabyte in a day to add storage onto the Filecoin network. So I wouldn't think that would be a concern that people don't have access to Filecoin to add storage.
Yeah, and just to add to that, so just to add to that, so of course, people are actively burning Filecoin to get their storage onto the networks. That's an interesting fact that, there's more access to that. But, since we just launched about a month ago, a whole bunch of different kind of solutions are coming to the marketplace to eliminate friction between capital providers and miners that have operational expertise, right? And so, on day one, there was no real lending market. There was no real way for an investor to necessarily get their tokens directly in the hands of a miner other than selling, and then a miner buying. But now a whole bunch of these solutions are popping up. There's wrapped Filecoin that's in experimentation. It's going to be launched in a couple of weeks. There are lending marketplace using Ethereum smart contracts where, investors could, lend some of their Filecoin to miners. There are other lending services like Huobi's HFIL, Coinlist has a platform, Anchorage and others are starting to build platforms. Codify is building this network, this marketplace. Dharma Capital has actually, started lending Filecoin, et cetera. So, as the network goes on and more developers create like interesting solutions to eliminate frictions, then all of that will make it a lot easier for miners to get access.
Yeah, that's great to hear, guys. Yeah, I was always wondering whether or not there was enough supply to actually reach that baseline, but it sounds like there is, and they're kind of getting there. And I guess just from a storage perspective, I guess two questions here. How long does it take for a miner to add all of their storage to the network? I read a lot about kind of sealing speeds and things like that. How long does that take?
Got it. So it really depends on the setup, right? As I said, like it's always a combination of strategy. There's no one optimal solution. It's always a trade-off, right? Like for a miner that is starting up, it may take them some time to get to a reasonable size depending on their initial capital investment, and it could be bounded by many things, right? Like but if you talk about miners in China right now, that's sealing throughput is not really a bottleneck for them. Bottleneck could be like how much the chain can take in a day. Right, like that's why we see people burning Filecoin to post a transaction onto the network, and sometimes it could be access to capital like pledge and so on, and there are just many factors, and it's not really like a one single limiting factor that limit the miner population as a whole.
Mhm.
Got it.
And,
That's
and,
cool.
and the other thing to think about is obviously, Ethereum went through a number of upgrades, from when they launched many, many years ago. Filecoin's already going through those upgrades, right? You can look at our FIP, our Filecoin improvement proposals that are live today. There are some major proofs upgrades planned in 2021 and 2022 that are already designed that will increase the throughput, lower the cost to seal and mine, increase retrieval speeds, all of that, right? So it's really hard to draw conclusions from a static implementation. You have to kind of project some of these improvements that are already been, coded up and waiting to be integrated.
Got it. That makes sense. And I guess just playing devil's advocate from like a cost perspective, if I'm a large storage provider and let's say I don't have like a lot of latent storage, let's say I want to build out a data center and add a lot of capacity to the Filecoin's network, I have to front those CapEx and OpEx costs, and then I have to buy, Filecoin obviously as my stake. Is there any pushback in the community on kind of waiting for those rewards to be a long time? I know that there was an FIP recently that made it so, some portion of the rewards are released a lot sooner. What was the dynamic there? Because it does make sense to get some reward sooner just to cover costs.
Yeah, so there was, we had actually planned that FIP about a month before launch. So it was just kind of working its way through testing and then released. So although it was released shortly after launch, it had already been planned a long time ago. And so, yeah, it makes sense for some of those rewards to become vested. And we thought, the community thought 25% was the right amount. But that said, it's really important that we're only attracting stakeholders and miners that are long-term oriented, right? And so if you created a copy of Filecoin and said, hey, there's no collateral requirements, you get all your rewards vested immediately, it would incent tremendously different behavior. People would just show up and mine for 3 days, then leave. And then as a client, which is really the most important stakeholder in this network, you won't have the reliability of storage that you need to trust the network, right? And so it's much, much more important for the community and the long-term prospects of Filecoin having a transformative effect on the cloud storage industry and the world if folks are long-term oriented. And so that's why a lot of those mechanisms are in place. And if a miner or any stakeholder, doesn't like that and wants to be able to get, all of their rewards and then mine and leave, then, it might not be the Filecoin may not be the appropriate network for them to participate in, and that's totally fine.
Oh, that's interesting, guys. I like I like how you guys are not only rewarding dynamically with two different models, but how the pledge is also quite dynamic as well. It's pretty interesting. And just some higher level questions for you guys, just on the industry and the token itself. I mean, you guys started with a baseline. I think it's not exabytes, right? It's EIBs. Is that?
Ebibytes. So it's
Ebibytes.
slightly,
Okay.
yeah.
Slightly different. So if you guys start with I think it's around 2 or 3 of those in year one, it grows by, I think, 200% a year. That's that baseline storage. And ZX, I know you're going to correct me. It's not just the storage amount, but it takes quite a while to get to the level where you guys are a large percentage of global storage, right? Like it seems like it would take a decade or so to be 10 or 15% of global storage. Do you think that that's too long, or do you think that that's aligns the network where you can, attract enough storage providers over a set amount of time?
So I think I think there are a few threats here. I think one is not just about the supply, but also about the demand too, and what is the storage demand on Filecoin. And I think that's something that the community should collectively work towards too. And at the same time, sometimes when we say community decide, people think we are joking, or people think we don't have a plan. But it really is if there's enough voices in the community that feel like we should be more ambitious, this is way too low, feel free to file a FIP, and then we can discuss and we say what are the costs and benefits, and maybe you can change Filecoin protocol for the better. And I think that's kind of active participation that we want to see in the network.
That's awesome, guys. Yeah, I like to hear that. And I guess just other, random questions on the token. It's not just used for pledges by storage miners. It's also used to pay costs to the network itself. What are the other use cases for the token beyond just pledging and beyond the reward scheme we kind of discussed?
Right. So there's also when a client wants to use the storage on Filecoin, they may require a miner to put some additional collateral, or they have to pay for the storage in Filecoin. And so that storage demand, the demand for storage on Filecoin is it's another main usage of Filecoin that we have not been seeing very strongly today, but it's going to pick up as time goes on. And then I think we mentioned that just now, which is like all transactions on the Filecoin network involve some kind of burning to compensate for the computation and the resources of the network.
That's awesome, guys. I really like that. And just on pricing, I know there's a lot of websites online where we could compare Filecoin's pricing to AWS. How are you guys crushing AWS's costs? Like, you guys are way cheaper to use, but you're brand new. Amazon has spent tens of billions of dollars kind of optimizing cloud storage data centers. How are you beating them on price?
Yeah, so I'll kick things off here. So, I think there's various different prices, and these things will fluctuate and probably go down over time. But, I think I've seen some miners, and the average miners kind of give a cost that is 20 times lower than Amazon Web Services or something like that to store Filecoin, which is very impressive, right? And the reason for that is, initially, the block reward is subsidizing some of that storage. So for a miner to, attract a client deal, they may not need that much money from that miner itself because the block rewards is subsidizing it, right? And then over time, as the block reward goes down over 20 years, so we have lots of time, the functionality, the reliability, the ecosystem of services will start to increase. And so folks will pay more and more for that over time, right? Now, one mechanism that's really important that we haven't discussed yet, Tom, is this concept of Filecoin Plus or verified clients, right? And so that ensures that if, pick your favorite data provider, let's say it's the Internet Archive or something like that, if they go through a verification process by the community and become a verified client, then they have a cap to put on, let's say, 10 petabytes of storage onto the network. And if miners choose to store that data, which is verified to be valuable and real and all of that, they will get a 10 times block reward than some other miner that is just storing whatever, like, let's say, nothing, right? And so that creates this huge incentive for miners to do two things. One is store verified clients and real data and make this network incredibly useful. And two is to go recruit as many valuable data sets to become verified, because there'll be a shortage of those and not all miners will be able to store them, right? And so again, just like the baseline rewards certain incentives like growth and total capacity, this mechanism is super powerful in rewarding, hey, let's store the world's most valuable data sets and make sure that the storage is being used for the best use case possible.
That's really cool. So how do you denote what makes a cut for a Filecoin Plus data set?
Yeah, I can go into more details, but I want to just double down on the previous topic just a little bit more. So like,
of course,
how much storage really costs is really a negotiation between like clients and like miners. And like Colin said, Filecoin Plus create very strong incentive for miners to like actually bring in demand into the network. And we saw miners offering free storage with fast retrieval in Europe, like thanks to these incentives. And I also want to point out that it's not really just competing with AWS. It's also not really just competing with on cost, right? Like it's about new experience. It's about like a different array of product and services that will emerge on Filecoin, and we enable miners to become providers of cloud storage that rival traditional services. And I think and software will get optimized every day, hardware get optimized every day, and then like people are making use of like idle resources around the world in like industry grade data centers provide very reliable and useful storage, because otherwise the protocol incentive will not work in their favor. And then we can have other people in home computer that serve that data to clients. So I think that is, yeah, Colin?
Yeah, and so think of it like Airbnb. You don't always use Airbnb because it's cheaper than a hotel, right? There are different experiences, different customizations that a hotel chain that has the same hotel room in 50 cities may not have. And so for Filecoin, It could be a tier 1, 2, 3 data center. It could have really high bandwidth or really, cheap storage. It could be HIPAA compliant. It could be in the US, or it could be in Africa, or it could be in Asia. And so when you think of Filecoin as competing with the existing cloud storage providers that are more or less uniform, it's not just on cost, it's on a whole bunch of different variables that can be exposed, right? So sorry to cut you off, ZX.
Yeah, okay, that's perfect. That's perfect. And I think now we can dive into Filecoin Plus, which I think is super exciting. So, so the question is, how does Filecoin Plus really figure out what, which clients or which clients to verify and so on? So I think without going too much into the details, the idea here is we have a network of notaries. Notaries are people with people organization reputation. They are not exactly verifying the data itself. They're endorsing like use cases and clients who might be who say there's a set of like frameworks and processes to make sure that which the community decide what the processes should be, in reflective of the principles of Filecoin Plus, which is like decentralization, making Filecoin useful, and being compliant, among a series of things. And this network of notaries will go around and let's say the client, they will have some kind of allocation plan on how they plan to allocate this idea of a data cap to clients, and client can apply to them, sometimes with the help of miners. And once they get notarized, they now have this capacity to be deployed and experience what using Filecoin network looks like. And I think that is a very strong incentive to make Filecoin useful.
Yeah, no, attracting useful data usage, that's incredible. And I guess my one not nitpick question is like that 10x reward multiplier, does that come from Simple, or does that come from the baseline reward? And I guess that's just the same bucket, right? Like other miners just get less. Right.
So just now when we talk about like the share of the reward that you're getting as a storage operator, you're basically getting a 10x in terms of that share. But it still depends on like, yeah, go ahead.
So it doesn't change the total amount of rewards, Simple plus baseline, that gets generated for the network, but it does change your proportionate share of that if you're by a factor of 10x. So how it gets allocated to miners is the variable there.
Got it. Okay, awesome. Guys, we covered a lot today. We covered all the minting model, storage miners, pledges, use case for the Filecoin token, some obscure questions. I wonder if there's anything we missed here. I guess, is there anything about the token that you guys maybe, you guys have been building for the last couple of years, now that it's live, is there any interaction, use case, obscure thing about the token or the econ that you might not have thought about when you guys were building that's now kind of apparent?
I mean, the community is coming up with so many different use cases and so many different ideas, right? Like the ecosystem development that we talked about on our last podcast just surprises me every day. There are over 100 active organizations building, over 250 new projects entering through hackathons and accelerators. We're launching, Tachyon is finishing up its cohort. Longhash is launching theirs in Asia in February for their accelerator programs. And we've seen everything from large archival use cases to Web3 use cases to Dropbox style use cases to video to DeFi to a whole bunch of different kind of things in the realm. So developers are getting really creative, and we want to support those developers in any way possible to get even more creative. I think another thing that surprised me, at least, is how much Filecoin is actually being burned on a daily basis because there's so much demand to onboard storage onto the network. And so that obviously leads to really positive long-term effects for all token holders, all miners, all participants. And that surprised me, on how much is being burned on a daily basis as well. So that's maybe another surprise so far.
Yeah, no, it's awesome, Colin. And a couple of quick questions there before we close out. How much exactly is burned? I missed that earlier.
It really depends. So, we can probably find some averages over the last 30 days, but it really fluctuates on a daily basis depending on how much people want to onboard on any given time. We've seen some peak days where 100,000 Filecoin gets burned for one day, but that seems like outside the bounds of normal. And so, it's more of you can think of it like gas fees, like a market.
Got it. So just the fees to use the network are burnt. It's not obviously not the pledge or the collateral or anything like that.
Yeah, just the usage of the network. But if storage is not reliable, then the collateral could be burned as well.
Got it. Okay, that's pretty interesting. And the last thing I wanted to hit on with you guys is your token allocation is kind of interesting because you guys have 55% of your tokens for mining rewards, 15% for reserves. That's 70% going to the storage miners. And you guys started building Filecoin in 2017. Meanwhile, projects only in the last 3 or 6 months are now realizing that a majority of their tokens has to go to the community to incentivize good behavior. Meanwhile, you guys had a majority of this amount to help grow your network from years ago. How did you decide that? Because it seemed pretty, revolutionary to me looking at it, considering you guys did this so long ago.
Totally. And you got to give credit to Juan on this one. He really thought very deeply into what's going to make Filecoin successful for the future. And it's really about aligning incentives to make sure that storage is plentiful and well priced and very reliable. And so, that's you got to give a lot of credit to Juan to kind of have the foresight to say, hey, listen, miners are going to drive the fundamental, infrastructure for this particular protocol. And so we need to incent them in the right ways. And I think it breaks down in a good way. While 15% of the storage of the 55% of the allocation is for storage miners, not all of that is automatic. Obviously, you have to perform with all the baseline things that we talked about. The 15% reserve, there's going to be a whole bunch of different ways that we haven't even thought of on how that can be used. And the community will make proposals, and then that'll be unlocked later when those proposals have a huge impact on the network, right? And so, it really makes sure that the infrastructure is placed to make sure that the network can be super dynamic in the future.
That's awesome, guys. Yeah, no, I think what you guys are doing is awesome. I find the token econ super interesting. I'm definitely going to prepare something. I think there's a lot there on just, the connect between the new circulating supply and how much is actually pledged. And if that links up, there's a lot to explore here. So guys, I really appreciate your time. Colin and CX has been a great deep dive and second episode into your token econ.
Awesome. Can't wait for the next one, Tom. Really appreciate it.
Yep. Same here.
Thank you.